Hello, welcome. This is Stephen Yi from the Year Real Estate Network. I'd like to take this opportunity to go over September 2022 Redfin data on the all 400 US metros with respect to the housing update. All right, so without further ado, let me go ahead and share my screen. And here it is. New listings in all Redfin metros. All right, the blue color uh, line indicates 2019. The red color indicates 2020. The orange color indicates 2021, and the black line indicates 2022. So with that in mind, let me start off with new listings in all Redfin metros. The new listings year to date, uh, end date September the 4th, 2022. We have a total of 83,000 listings nationwide in all the 400 metros, like I said. However, it is a minus 17.5% less than 2021. So there's a concern. And also, in before the pandemic in 2019, the listings were almost similar than currently 2022 September, and even lower. The listings are even lower than 2022, and so the trend line kind of started back in June, a few months ago. Soon as the interest rate has skyrocketed from 3% to now around 6%. So since June 26 all the way until September, so July, August, so around a little bit more than 2 months, we have seen a very steep downward trend with respect to new listings. So obviously, you know what this means, right? This means that there are less inventory for sales. This means that the sellers are pulling back their intentions to sell their homes, and the buyers, the demand from the buyer side, again, due to the lower affordability issues, they are not buying the homes. So let me go over the next things that are important. Let's go over the active listings, right? Active listings, and year over year right now is around 840,000. So it's a 3% increase year over year from 2021, which is right here, right? There are similar active listings 2021 versus 2022, whereas in before the pandemic, 2019, there were 1.2 million active listings. So we have from year to year, then to 2020, right here, 2020, from 2019 to 2020, there were a 21% decrease in active listings. And then from 2020 to 2021, there's another 15% decrease in active listings. And then now 2022, so only a 3% rise from 2021. So we are seeing a downward trend with respect to active listings ever since the peak. The peak occurred just about a month ago. So since the beginning of this year, 2022, active listings were steadily going up. Then when the interest rate hike just shocked everybody, then the sellers are beginning to realize that, and they are pulling their homes out of the market. And we are seeing a downward trend in the past month from August to September. And then, so remains to be seen for the remaining 3 months of this year, fourth quarter 2022. If this trend continues, we are going to see very, very low inventory for sale. So that presents a major challenge moving forward, as we have experienced very low, record low inventory we have experienced in the latter part of 2020 and throughout 2021, and in the demand for homes are so high based on the historical low interest rate. That's why we are seeing skyrocketing of prices. Now that the interest rate has decreased substantially and the demand has a big pullback, So the sellers are not selling and the buyers not buying. So if this trend continue toward downward trend for the rest of the for a few months this year, then we can see a very low inventory. So moving forward into 2023. So that's very interesting. And then I'm going to go over the pending sales. Again, I predict I did not look at this graph in advance. So I'm looking at it for the first time. So pending sales has to be lower, which is the case, right? When you have decreasing active listings and when you have decreasing new listings, it is very obvious that the pending sales, which the buyer accepts, put in the contract offer was accepted, has been decreasing ever since May of this year, May, June, July, August. So about a little bit more than 3 months, we have a decreasing trend in terms of pending sales, right? So we have a 74,000 homes pending sales nationwide. Now the trend has been decreasing for the past 3 months. Now we have 61,000 total pending sales nationwide in all 1,400 metros, which is a 19% decrease year over year from 2021, which is the orange color right here. And yeah, that's very concerning, right? And if this trend continues, again, it's going to continue to cause a major inventory shortage, but not only for the duration this year and for early part of 2023. And let's see, you know, what's going to give, what is going to give in the next 3 to 6 months for the rest of this year, 2022, from September to December, and then the first quarter of 2023. If this inventory, if this pending sales, active listings, and new listings continue to decrease, right? We're going to see some major problems with respect to available inventory for sale. And if so let's see. Let me see what else I need to go over. Let's go over the medium sales price nationwide, right? Let's look at the big picture. The big picture is before the pandemic. The medium sales price in 2019 was a mere 280,000. Now at the peak, June 19th of 2022 this year, the medium sales price has skyrocketed in the past 2 years to 394. So it was a 13% price increase from 2022 to 394 from 347, right? A year ago, 2021. From 2020 to 2021, we see a huge gap, huge skyrocketing of prices from 2020. From 2020 was 284K median price, and then then June of 2021 from 284K to 350K, a whopping 22% medium sales price increase from 2020 to 2021, and then from 2021 to 2022, another 12% skyrocketing of home prices throughout the country. So obviously, and the interest rate has increased to 6%. So what we have is 40-year home affordability low, record low. So that's why with the 6% rate, around 6% rate, so we're seeing a big pullback in demand, and then a big pullback in sellers putting their house for sale because they're locked in. Many sellers have refinanced their homes at 3% or lower rate, so they're sitting on their home on a 30-year fixed rate mortgage, so they have no incentives to sell a home in which they're paying historical 3% low rate to upgrade, buy a new home at 6% as presumably a higher price, so potentially double their mortgage payment. So that doesn't make sense. So anybody who's motivated to sell has to be in a stressful situation, perhaps. But anyway, if I were you, I wouldn't sell. I would, sit on my house and just wait out this so-called housing correction to see what's going on with the interest rate, what's going on with the recession situation, pending recession, maybe what's going on with the economy and job prospects, all those economic concerns that we are all facing as Americans right here. So everybody's resetting, is waiting to see what's going on. So that's very interesting. And then the one more thing, which is the most critical, all right, is the next thing we can talk about is the month of supply. This means if a healthy market, a balanced market whereby demand equals supply is around 5 to 6 months. We all know that, right? Anything lower than a 5-month supply or inventory nationwide or any local market for that matter, indicates a demand, even indicates demand or higher than the supply. It indicates it's still a seller's market. So therefore, if that's the case, that means housing prices should increase, right? If supply of inventory exceeds 6 months, that means there's an oversupply of homes available for sale and not enough demand. So that could cause a buyer's market, and that could cause a so-called real estate crash, right? And we're not seeing that. We are seeing a lot of people have massive amount of equity in their homes. In fact, 40% of all homeowners have no mortgages on their homes. They are free and clear. So they are sitting on their massive equity of their homes. And the remaining 60% of people that have mortgages, they have substantial mortgages in their homes because when they purchased their home in the past, they purchased it with a high down payment, 20%, 25% down payment. And with the rocketing housing prices, and especially the past 2 years, those homeowners with mortgages, most of them have extremely very high equity position, and they're not gonna do anything about it, right? They can sit on their pretty houses. Okay, so with that in mind, let's go over this most important metric, which is month of supply. And drum roll, please. The months of supply as of September the 4th, each actually is weeks of supply right here is 10.8. So 4 weeks equals 1 month. 4 weeks divided into 10.8. What do we have? We have 8 weeks, which is 2 months. We have 2.2 months, I think, right? Correct me if I'm slightly wrong. There are currently nationwide in all 400 metros, there are 2.2 months of inventory. So what do you think, right? 2.2 months of inventory to me is a very, very low, record low, almost record low inventory of homes. Okay, so we are still at a very strong seller's market. And with that in mind, historically wise, when we have less than 3 months of supply inventory and the demand is, is pretty moderate, it's okay. This means housing prices are not going to go down. There will be no real estate crash according to the current scenario, and strong sellers market. So the sellers still have the negotiation power, although in certain markets that could be different, right? This is a very high level data that we're showing. As you know, every market is different. So in some markets, it may have 4 months supply inventory or even 5 months, almost, a balanced market. In some market, it has even less than 2 months of inventory. So it all depends on a very, very specific metro, very specific neighborhood, very specific city. All right. So I think that's all I need to say. So the takeaway is, okay, I forgot, price drops. That is very important, right? Ever since around in the first quarter of this year, 2022, we have seen very, very high price drops because sellers are not aware of on the changing markets and what have you, based on the high rate increases. They have listed their price way over, way more than they should. So they have to reduce their prices, reduce their list prices, and uh, up until a month ago, August the 7th, there are like 7.4% of active listings with price drops, and multiply by 4 weeks, so they were on 28% on the average. 28% of initial listings by the sellers, they have to drop their prices. Then they realized around a month ago, August 2022, they realized that the market has shifted. They need to price their house relative to the demand, so they are lowering the list price much more realistically. So since August, which is a month ago, the percentage of active listing drops has leveled out. So they realize they have to price their homes relative to the demand. So we should not see any kind of this kind of elevation in terms of the price drops for the foreseeable future. We should see a very level amount of price drops moving forward for the foreseeable future. Does that make sense? All right, so that's pretty much I have to, the takeaway is, again, all the crash, the bubble, and all those crazy overreaction by people out there perhaps is a little bit over exaggerated. So my takeaway is there are still, the housing market nationwide right now is still going through a little bit of pain, still going through a lot of challenges. And at the end of the day, we'll still have imbalance between supply and demand. And we should still see housing prices very, very steady. Yes, some markets like California, you'll see some price drops or like 10 to 15% in high price market. For example, the market where I live in San Francisco Bay Area, we have seen a 5% or 10% price reductions, and similarly in Southern California as well. So California pretty much always leads the way in terms of the most extreme and the most what have you, right? Over the years, I've been living here in the Bay Area for a very long time, so I see the cyclical nature of the housing market in a high price California. So other than that, I mean, of course, in the other high price markets, similarly, as in Northeast, New York City, and the big cities, yes, there are some little bit of price drops, but the smaller metros in the South and Southeast, the affordable markets, we have not seen any significant price drops based on my current research so far. So that's all I have to say. There's no need to panic. We are still seeing a very low inventory with moderate demand. If and the interest rate of 6% or so, or has really continued to cause concern by the buyer. They are staying put because of many factors, including affordability factors. But remains to be seen if the interest rate are perhaps not going to change significantly this year. But if the early next year, 2023, the first quarter, if the interest rate reduced by 1 point to like 5%, we may see a lot more buyers that are coming off the sideline and will get back into the housing purchase. So, and with the perceived very, very low demand of homes, as I stated, we might see a lot of activities going on, a lot of real estate activities uh, will reboot itself. All right. Thank you so much. Hopefully, if you receive a lot of value from this video, please click the like button to enhance my YouTube channel, and also subscribe to my channel. And also, better yet, the last thing you should do is put down your email into my website at the bottom of this video, so you can receive free real estate newsletters about real estate investing and other free education. You become a free member of our real estate community of real estate investors. All right, and with that in mind, thank you so much for listening. This is Si Wing Yi from the Yi Real Estate Network. I'll see you on the next video. Bye-bye.